Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. All that in service of the aggressive goal of retiring by 40 years old. Today, you get to see that in practice and see in what and how I invest my full 2.38K weekly paycheck. I don't do the normal paying the bills first and investing 30% of my paycheck like I used to do. By using margin to pay my bills, all my bills, that enables me to invest 100% of my income and never interrupt the money compounding in the brokerage account. Step by step, you'll see how I invest to build monthly cash flow that'll eventually exceed my monthly expenses and replace my full salary. That said, as always, you'll get radical transparency on my channel. I share my real numbers, and you see exactly how much skin I have in the game with any given position. You can follow along my portfolio by checking the free Snowball portfolio link in the description below. If you appreciate all the transparency, make sure to give a like and subscribe. As usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. There's always risk to investing, and definitely do your own research before doing anything. And this is the weekly flow chart that I use to invest. It's 100% of my income and live out of my Robinhood brokerage account. We'll just do a quick once over of this today. Basically, I have my full paycheck comes in, that deposits to Robinhood Banking now, and 100% of that goes to the Robinhood taxable brokerage account, right? And just as a reminder, this is exactly what I'll be doing on the video today. So what I'm doing is that I split that 10% that goes into growth. So that goes into any of the growth ETFs I have, QQQM, SCHD, VGT, things like that. And 90% of it, so the bulk of it, goes to high yield income ETFs. And the idea is to put those into kind of some of the safer yielders. So things like XPace, TSPY, TDAC, MLPI. And that's just to really build up my monthly income and then eventually replace my full salary, right? And what happens is that I'm kind of just building that asset pool, right? My gross asset value. And what I'm doing is that I'm borrowing against those assets on margin at a 4.5% interest rate. So that's like lower than my mortgage. My mortgage is 5.95%. And that's what I use to pay my bills. So I pull out 7 to 9K a month from my account to pay my expenses. And that's not by selling assets. That's by taking a margin loan against those growing assets, right? And really, what gets added to the margin balance at the end of the day, though, is just the difference between my monthly expenses and the monthly dividends I get, right? So right now, this needs to be updated, actually, but my monthly dividends are actually closer to 5.6K a month. So really, it's only the difference between this 5.6K and the 7 to 9K. So anywhere between 2 to 4K gets added to the margin balance every month, technically. But really, what I'm doing is just kind of treating my brokerage like a bank account, right? I'm basically paying 4.5% to make a 30% blended yield between all my positions. So kind of similar to how, like, when you deposit money into a savings account, the bank takes that and loans that out and gives you a little bit of the interest, but I'm kind of keeping a lot more of the interest, right? So I'm doing this, I'm rinsing and repeating this every week. And the goal is to really get early retirement from my games career at 40 years old in 4 years from now, since I'm 36. So we're basically just going to run through this whole thing in practice today. So let's just pop over to Robinhood and check what the market is doing today. So definitely a little bit of a green day today. Kind of nice after the last 2 red days here. So I was kind of wanting almost to buy early this week with the paycheck because I got it yesterday technically, but just waited in the end still. Never know if it'll keep going down or up. So it went slightly up today, but in the grand scheme of things, still buying the dip here since we're still in this lower channel, right? Kind of see even on the month, a bit red. But in the grand scheme of things, it's a very little dip compared to the run up we've had. But definitely still excited to buy this week. And let's take a look here what we should get. So if we pop over to my investment sheet here. So for the growth side of things, so let's just do like the 10% first. So we have this much to buy. Actually, let's just transfer that over. I haven't transferred it over yet. So unfortunately, I can't show this yet because Robinhood Banking is only on the mobile app. I actually tried testing out a setup today with the webcam and filming me doing it live, but didn't quite work out as I was hoping. So I'm just going to have to do it here. Just imagine a nice Robinhood Banking UI getting transferred over. But problem too is that I can't screen record either because Robinhood's actually smart and kind of blocks you from showing transfer stuff, which is kind of good and kind of bad. But you should kind of see this update here. So I'll just take a second. You should see this value update. There you go. You can kind of see the buying power update as well. So basically I get double the amount of what I transferred over as buying power, right? So basically double this amount. And then the other amount just gets deposited to cash here, right? And now let's just get all of that invested first. So 10% of that, so times 0.1, right? That's 238. So let's just get that invested first. So we'll see here. I've been doing IALT for the last couple weeks. So let's just check what has dipped this week, because there's been a lot of dips. Like look at all these dips, right? So look at the average 10 days. So really just the last week. Look at all those dips. So there's only very little that's actually green this week. You can kind of see them here. So let's see on the growth side of things, which one has dipped the most? It's looking like it's VGT here. And IALT just barely 0.52%. So I'm thinking I'm going to put into VGT just because I've been focusing on like kind of the other investments on the growth side for the last few weeks. So I just want to kind of put into the ETFs there. I haven't touched VGT in a bit. I've done a little bit this week from like small buys and things like that, but let's just do that. So let's do VGT 238. Great. And then, so that's minus 238 here. So we have this much left for the high yield. And I'm thinking I might split this between two funds. So if we split that, 1074. So I'm thinking about two funds here. So if we go back to the dip here, love this little tool, by the way, on Snowball. And definitely check out my free Snowball portfolio in the description below. And then also there's my referral link there if you're interested. But yeah, you can see that I use this all the time. I love it. So the two big ones that pop up to me is KCOP and BLOX. Those have dropped a lot this week. So crypto has dropped a lot just overnight. It's under 60K again. I wonder if there's like some big liquidations happening from margin again. Don't know if the bottom's fully in yet. People talk about maybe October, but I'm buying the dip there a little bit. So like if I check on BLOX here, right, and kind of check where I've bought. So yeah, I've kind of bought in this lower channel here. Could still go down all the way here, went down to 12. But yeah, I think I'll just buy a little bit, a chunk of BLOX there. If we check KCOP as well, that'd be well below my previous buys here. Still has gone down quite a bit here in March. So kind of getting close to that actually. But I think I'll split between those two essentially. So let's do that. So buy BLOX and then KCOP. So again, BLOX is kind of like, I've been kind of favoring this over BTCI just because I think it'll have better uncapped growth as there's like an upswing. And I do like that it's a little bit more diversified in crypto and crypto companies and even just like stocks like NVIDIA and Robinhood that kind of contribute to the crypto ecosystem. So just like the diversity there. And really when we check it in like Testful IO, right? Like I think the performance kind of speaks for itself as well. Like when you look at it. So even compared to like BTCI, right? BLOX has just held up much better. And then if we compare it to even BTC, right? Or sorry, let's do IBIT. Yeah, BLOX has even beat IBIT, which is crazy to see. And this is without total returns, right? And I think that's because of like its companies like Robinhood, NVIDIA and stuff kind of buoying it. But let's just do that. So let's do 1074.03. Literally every penny. I leave nothing to waste here. So let's buy that with BLOX. Great. And then KCOP. So KCOP is kind of like a little bit of a play on the semiconductor space and AI, just because like the data centers just like used tons of copper for my research, right? And shout out to Oculus on our Discord, who's kind of turned me on to this. Why our Discord, great little community. You can join this by joining either the YouTube membership or the Patreon membership for $3 a month. But yeah, great community, lots of great back and forth with people. We started a new section recently where everyone's just sharing their portfolios. So lots of people you can learn from and lots of different things that people are doing. So yeah, just great back and forth. I post all my trade alerts here and some good research ideas from people. Sometimes Oculus was like a good one to turn me on to KCOP and the overall copper play, though I've been kind of reading about it as well. So it's kind of like a confluence of events there, but that's a Discord if you're interested. And yeah, let's just buy KCOP here. So 1074 and let's do that. And this is nice. This used to be just whole shares only, but I guess it hit enough of an AUM now that like I can buy partial shares, which is nice. So 31 million. So great. That's everything invested. So you can see that my net value hasn't changed, right? Just because like I'm basically putting the money in and just investing it. So the buying power has changed, but not the net value. And really what happened is that the gross value has grown. So yeah, that's the full paycheck invested. You can kind of see that. And one thing that's special this week, so with the dips that were happening this week, I was kind of investing throughout the week, right? So what I do is anything that's like weekly dividends, so BLOX, GIX, Chippy, Ulti, YMAX, I invest 50% of that to just kind of help keep supercharge my monthly income investing a little bit more, just to kind of make up the difference that I've been seeing in my projections in the month. And then also, I always reinvest all my growth dividends. So QQQM, SPMO, VGT, VU, SEHD. So I've already invested QQQM and SPMO because I had like the early returns from that as far as like what the numbers would be. But I haven't done VGT, VU, and SEHD yet. So I figure I'll take that and actually reinvest that into the growth side of things. So if we calculate that actually, so 36.12, 14.35 plus 398.86. So 449.33 to invest on the growth side of things. So let's see what we do with that other chunk of change. So this would be on the growth side of things, right? We could put more in VGT potentially. QM is on a little low too. Sorry, you might have heard my cat there. She was like coming on my lap as I film. So IALT's down a little bit. Yeah, maybe we should do that. Yeah, so I put a little bit on VGT already, bought a little bit of that dip. And then maybe we can just buy a little bit of IALT here. For OR, as I've mentioned, kind of waiting for that to kind of come back a little bit, and might kind of just sell a chunk or maybe all of it and put it into IALT instead. Just have been a little bit disappointed, honestly, in OR with like how it's kind of lagged behind compared to everyone else with like the rally that we had over the last few months. Yeah, I think it's just like overly exposed to Japan in that sense, and more affected by the Strait of Hormuz stuff that happened with Iran. So I might potentially just kind of move that to IALT, which has like more diversified international exposure. So yeah, I think, if your thesis and things change with a thing, it's definitely worth reevaluating. And then that might be the case for that. But yeah, we'll just give it some time still. But let's just do IALT, I believe, and just buy a little bit of that dip there. So 449.33. Okay, so IALT 449.33, and buy that. Great. And yeah, again, I kind of consider IALT as part of the hedge bucket here, right? So this is just kind of like positions that I'm hoping swing a little bit less. So it's mostly made up of long short equity ETFs, so like CLSC, IALT, ORR. So CLSC on the US front and IALT and OR on the international front. And then gold just has an uncorrelated asset to the market, though it's been swinging a lot the last couple of weeks. So you can't fully just depend on that, right? So kind of nice that it's diversified across these. So the idea is that this chunk of money just kind of won't change too much. It kind of stays that like 10% of the portfolio stays relatively stable. All these are kind of like relatively lower beta and volatility overall. So that's the thinking there. And that's the full Paycheck invested. So let's just get everything updated now on the spreadsheet. So let's just get our numbers here. And again, like, I'm in Snowball, but I like tracking this manually too, just to see how stuff changes, right? Like as I add stuff, so you can see the margin total here went up. So this is from like the full Paycheck being added, right? My margin U should actually be relatively the same, just because, yeah, I basically deposit it, the margin balance goes down, but then I invest it, so it stays the same. And then let's just add all the positions I bought. So IALT should be a nice little average down. Yep, there you go. See, it's kind of just nice to see that. You don't get to see this as much if you're just kind of depending on the automated things, right, from Snowball. So I like doing both. I'm a weirdo that way. So VGT, that will be a little bit of an average up, just because, like, yeah, I have a really good cost basis on that already, and it's very in the green, as you can see. So just buying a little bit of that dip, and then do that, and then BLOX. This will be a nice average down as well. See that there. Do the number of shares, and then KCOP. This will be a nice little average down as well. Great. And then this will be no more round numbers there. Kind of like all my crazy jumble of numbers here. So that's everything updated. So with that, if we add up all my positions, so all the assets in the portfolio, that adds up to a 416.7K gross portfolio value. Margin used is sitting at 188.8K. And which gives us a net value of 227.9K, right? So the key thing here is that like the gross value, this just keeps growing. Like this really will just only fluctuate from the market, right? And as you can kind of see since my last Sunday update, this has gone down a bit because of the red week we've had. But this will, as I keep investing my paycheck and dividends and things like that, this will just keep growing and compounding. And the idea is that I never want to interrupt this, like I said, right? I just want to kind of let the portfolio do its thing. Growth here will just be kind of compounding in an uncapped way, since it's just kind of pure growth ETFs and dividend growth with SEHD. And then on the high yield side, I'll just keep adding to those to build up my monthly salary. And then also some of these do hold up with their NAV and still appreciate, right? Not as much as their reference assets, but still appreciate. So the growth side of things is sitting at 202.6K, and the high yield income side is sitting at 214.3K, which makes up a 416.9K gross asset value. As far as the margin health, we're sitting at 54.71% equity. The buying power is sitting at 84K essentially, and then have 42K in catchable for withdrawal, which is half the buying power amount. And then gross portfolio value, margin used, net portfolio value is all good. And margin maintenance is sitting at 104.2K now, which makes a buffer of 123.8K from the net portfolio value. So that's 54% on the net portfolio value, and then also 29% on the gross portfolio value. So yeah, this is the key one I always keep in mind, as I've mentioned. So right now my portfolio is basically, 29% away from margin call. So I'm always monitoring this very closely. Ideally, I want to get this to like 40, 50% eventually to really insulate myself. As far as my monthly dividends, that's kind of boosted me up to $5,558 per month, which is awesome. So that roughly amounts to 31% distribution yield blended between all of them, right? So that's 66.7K a year, 1.2K every week, and then $182 daily. So this 31% is on just what's invested in the high yield income assets, right? If we go off the full portfolio value, that's closer to 16.6%. So really, that's a nice spread. Like I'm paying $704 a month to carry this big margin balance, but I'm making 5.5K on that. So that's a $4,854 monthly margin spread, or a 26.6% positive spread. So pretty good deal, if you ask me. And yeah, that's the numbers. Now, like I've said, I'm kind of mostly focusing on these anchor ETFs, right? So stuff in here. So KCOP today, and then bought a little bit of the higher yielders here, so BLOX. But yeah, you can kind of see here that I'm really focusing on the anchors this year. So the 10 to 20% yielders that are a lot more solid. And again, like the reason I do that is that you can kind of see it here, right? So the middle here, these, even with dips, these just kind of stay relatively stable in dividend yield and NAV. But you kind of see Alti, YMAX, BTCI and stuff. Those have eroded, right? Just because of their prices going down. So that as a correlation also gets their yields down. So people were asking in the comments, like, why still invest in these? These, they kind of buoy my income, and I'm fine with kind of just collecting them and not investing in them as much. And then just kind of taking like 50% of those dividends and reinvesting it into safer yielders, right? And just really building out the core. So I'm really focusing on this middle part here, all these positions, right? Like I've mentioned. So that's the idea there. I'm okay with them eroding for Alti and YMAX, just because like really at the end of the day, like these are just 6.5% of my portfolio, right? So in the grand scheme of things, it's like relatively little, but it's kind of producing a lot of income. Like that 6.5% is kicking out 17.5K of annual income, or 1.4K of monthly income. So fine with taking that and using that for the portfolio. So this will just kind of get smaller and smaller as I keep investing in the rest of it, right? So that's the key point there. But yeah, that's full Paycheck invested. This week, unfortunately, there's no bills to show that I'm paying, just because I had my credit card bill due on the 24th here that I paid already yesterday. So this came out of the portfolio. And then next week I have the mortgage coming out on the 30th. So yeah, I'm not going to send that over right now, just because that will start incurring interest on the margin balance, and would rather just do that closer to the date on the 30th. So you'll likely not see that on video given the timing of the end of the month. But yeah, that's how it's looking for this month. And that's a video. If you appreciate this transparency, definitely give a like and subscribe, and hit the bell notification if you want to be notified about future videos. And I'll catch you in the next video on Sunday with the weekly portfolio update. Peace.